All right, what's up, everybody? Welcome to the Friday Mastermind. Every Friday for over, Todd, 7 years. You and I have been
Eight
doing
years.
this. Eight. Oh, there you go. I'm always underestimating. But so 8 years, every Friday, 9 o'clock Pacific, we're bringing in badass people, and it's always the same goal: like help mortgage professionals, help loan officers be modern mortgage advisors, like be data driven, deliver advice with price. Don't just deliver price. Be the captain of the wealth team. Remember that you're not just there to help people get a loan. You're there to help people achieve home ownership younger and faster with financial freedom. And so that takes a lot of different people. So today we've got an incredible CPA tax advisor. Before I bring Barbara on stage, Todd, anything you want to say to frame the call?
Well, I think this is one of the most important conversations that we need to have as an industry. You need to be really, really well versed on this, first and foremost for yourself and for your family, right? I feel like, if you go back to we're W-2, right? We have the least opportunity. We definitely pay our lion's share of taxes most of the time. And so anytime that we can learn how to better steward over our own financials, I think that's great. But also, you know what? If we truly are who we say we are, that we're truly putting our clients first, we also need to have this information and advice for them. And then I think the last piece of it is, and it was part of the call from earlier that the two of you did, Deborah and Dave with Barbara, is really also this whole idea of building a relationship with an amazing tax advisor like Barbara. And so I'm really excited for the rest of this call. And of course, I really apologize. I'm underdressed for today, but you know what? It is the Eagles kickoff day down in Brazil. So I really wish I was calling in from Brazil, but I'm here in America, and go Birds.
Deborah, anything you want to say?
Well, besides vomiting after that last statement, no, I just first of all, big thank you to you and Todd for doing this for 8 years. That it wouldn't be where it's at today without that consistency. And I'm sure in the very, very beginning, although it's the same goal and same mission, it has evolved and gotten better. And it's such a great example for those who are listening, because even Barbara, she goes beyond just the tax coach. Like, she's so much more than that. And Dave and Todd, you guys both are so much more than what, quote, is your job, and you're always looking to give to others. And so you guys are my example to clients, that this is something that they could do every week and have different guests that they interview and just focus on how do you be the most valuable player to your community that you serve. And so maybe some of you should have Barbara come speak. But that's it. I just want to say thank you. And I know doing anything consistently over time can be hard, but it's the most valuable community for all of us that listen and tune in, and just wanted to say thank you.
Well, thank you. You make this even brighter. I'm going to say 3 years. Did I get that right? That you've been partnering with Todd and I on this show? 3 years?
Yes.
Did I get it right?
I'm horrible with timelines, so I'm going to say yes.
Yeah, it could be 4. But so thank you to you, Deborah. You make this mastermind much brighter, much smarter, and way cooler. All right. So guys, we have Barbara. She is a CPA. I met Barbara through Sosi Avila, who I think is one of America's best mortgage advisors. He's a mortgage coach. He serves families beyond the transaction. They've got like a really cool relationship in terms of just how they lean into the markets they serve, in terms of how they help consumers. Well, she is a tax advisor. She's a podcaster. She's got an Instagram channel with, looking at it today, 261,000 followers. It is valuable. I have 2 kids in their 20s, and I'm like, follow this on Instagram. Like, kids should watch this, loan officers should watch this, realtors should watch this. She's edutaining. And as Todd said, if you're in mortgage, you can make a real lot of money in this business, but you can waste a lot of money, so we're not going to just do the typical interview of a CPA, because she's got a lot of wisdom to bring to the table, like, that could help you raise money smart kids. She could bring wisdom to the table to help your kids be more entrepreneurial. Like, I got all kinds of that value. But Barbara, I want to kick things off. And I want to hear how do you position yourself in the marketplace? Because I'm leaning into mortgage professionals that they should, how do they position themselves? What do you like? Someone asks you what you do. How do you answer that?
Yeah, if someone says, what do you do? I say I help business owners and real estate investors save money in taxes. And when people hear that, they're like, oh, well, everyone wants to save money in taxes. So they ask follow-up questions. But, when I first started, I didn't even know what like positioning meant, or how do I want to be in the marketplace? What do I want my niche to be? I had no idea of those things. I was really just winging it. And so when I started on social media, it really was just being authentic to who I am and what I wanted differently in this industry, in the accounting industry, at least. Like probably all of you listening, of an accountant, and they're probably 75-year-old males that should have retired 10 years ago. And so I really wanted to be different, like make it fun, make it entertaining, like you were mentioning, but also speak in a way that like everyone can understand. It shouldn't be this like foreign language and you just nod your head because you're too afraid to ask a question. So I was just trying to be who I am, and people liked it. So
Okay, so I'm going to do another why question, and I like that, by the way. By the way, did everybody notice there's riches and niches, and she's got some niches there. Like I specialize in helping business owners and real estate investors. So she's, speaking to a niche. And so I thought that just take that away from that. You've got a podcast called Life Changing Money, and we build today's call around life changing money. There's this community that Todd and I are both guides of called the Modern Mortgage IQ community, modernmortgageiq.com for anyone that wants to check it out. But there's 8 pillars of a modern mortgage advisor. And one of those pillars is money. Save money, invest money, have a plan to achieve financial freedom. So we have that belief, why did you name your podcast Life Changing Money? And what does that mean to you?
yeah, I mean, I had our tax firm for a few years, and our sole goal is to save people money in taxes. And that's what we were doing. We were saving people shit tons of money, hundreds of thousands of dollars a year. But we figured out it was more than that, right? Like people were using that money. We had someone get an IRS refund check of $40,000 one week. And it was the same week the hospital called and said, we have your adopted baby ready for you, but you have to be there today with a $40,000 check. And if that hadn't have come, they wouldn't have had the funds to do that. And they had been trying to get pregnant for years, failed IVF after failed IVF. So it was like divine timing. And that's when we realized like, it's not just tax savings, right? Like this can change people's lives. And so I really wanted a podcast where we bring on guests and learn about their journey to entrepreneurship, their journey with money. But in terms of like my money journey, it was also like to let people in on my journey as well, because probably people looking in from the outside, they're like, oh, you have like your dream beach house and you have a bunch of rental properties and you have these designer bags. Oh, it must be nice, right? But like my parents are drug addicts. They're still drug addicts, and that's still my story today. And so I always tell this story in my keynote. It's a much longer story. I don't want to bore everyone today, but if my mom had the financial savviness and knew how to even balance a checkbook, maybe she wouldn't have had to rely on my abusive father even till today. Like I had my father arrested for attempted murder when I was 16 of my mom. Like it's just crazy. And it's more than just money. It's more than just tax savings. Like this can save people's lives.
Wow. That's incredible. I knew you had a story. I didn't know all the details. Like we could do a whole podcast on just overcoming adversity. But before we go by that, because you said a couple of things just in terms of like how small differences of money, and 40,000 isn't small, but how it can change a life. And that's one thing that we talk about a lot, like small changes, like prepay your mortgage by $100 or $200 a month can help you achieve financial freedom and pay off your house 10 years faster and
Yeah.
save you hundreds of thousands of dollars in interest. I mean, that's just one example. So before we go on, Todd and Deborah, I'm going to go to you first, Todd, but anything you want to call out from either one, her story, or two, that whole life-changing money story?
Well, I mean, the story is incredible, and certainly, can't wait to watch you in a keynote and hear more of the details. But when I hear this life-changing money and hear the story about the adoption, like that tells you that obviously what you do matters more than a paycheck. And I think that resonates with all of you on all of you loan officers here or real estate agents that are watching this, because you're also changing lives. Maybe not quite that way, but you have that same impact. And so that's really why I think this kind of conversation is really critical, because ultimately in the end, you are going to learn by following Barbara, by hopefully what we talk about the rest of this call, ways that you can truly impact others. What do you think, Deborah?
Well, I think I appreciate you sharing and being vulnerable, by the way. I can't imagine what you've gone through and what you're overcoming and still overcoming, but to the power of storytelling. And this is what, hopefully everyone's doing annual financial reviews and looking for opportunities, whether it may not be on the interest rate for their current mortgage, but maybe it is with their taxes or insurance. And it's what that savings can do for a family, but you have to have the conversations and continue to be in their life to be able to capture these types of stories. And when you get good at capturing them and then telling them, it's very moving. And anytime you can go from logic to emotion, it helps make your brand be a little more stickier, and you're memorable, and it's easy to share. And it makes people think of, oh, this is my aunt or this is my sister. Let me share in the DMs this video that I just saw from this tax coach, because this is exactly what they're going through. So maybe even if it's just $1,000 savings, that can go towards the piggy bank of buying their first home sooner, faster. So make sure you're doing your annual reviews, guys, and documenting the stories of either the wealth that you're helping people create or the savings and what that savings can do.
I think it's also too, like, figuring out your why helps you through the really hard days. Like, taxes, like mortgage, is a really hard industry. Like, think about if you get an IRS letter in the mail, what's the first thing you do? You go to your accountant and you're like, what did you do wrong? Like, oh
Freak
my
out.
gosh, right? So like, we're constantly feeling the weight of everyone else's stress in this industry, and that's very similar with mortgage. Like, you're dealing with someone's like most stressful thing to have ever happened in their life, at least financially. And so to have your why will help you get through those really tough, stressful days where like stuff falls through, like closing didn't happen, whatever it might be. So like really peel back the layers to figure out your why, because then you'll keep going.
All right. So I know there's two questions I definitely want to get in this podcast, but I also want to push this audience that if you're watching this, whether you're watching it on social live, you're watching it in Zoom, if you have a question for Barbara, like, we'll bring it. And even if you're watching it on YouTube, Barbara and I are developing a friendship. She lives really close to me. We live in the same neighborhood. I think I'm going to be on your podcast sometime in the not too distant future.
Yep.
And I have a feeling that we could get her back here. So if you're watching this on YouTube and like, Dave, I would love to talk about blank, like, put that in the comments on YouTube. So Barbara, here's the two questions. I'm going to read the one that I'm going to do second, just so you can be thinking about it. And we
Okay.
talked a little bit about this in the last one, but I want to replay the conversation, and I want to hear it again. But we have this nonprofit called First Home IQ. The mortgage industry has it. Todd and I were two of the co-founders, but we really believe that parents need to help their kids get into home ownership as young and fast as they can. And we could talk more about that when I actually ask the question, but just know, don't worry about repeating anything last time, but I'm going to want to know the tax coach advice to all parents, so that loan officers can lean in and really give families a playbook. Like, hey, here's a playbook to help your kids get into homeownership younger. But the first question I want to go to, and then remember, guys, we'll have plenty of time for Q&A, but we're in a market right now that's shifting, so interest rates are starting to come down. Yeah, right. Woohoo. The NAR settlement has taken place, so that's made a massive change for realtors, and it's also making loan officers more valuable in the sales process. So it's good news for LOs who are advisors like Sosi and the people that follow us. But we're going to start seeing a lot of rate and term refis, and so we're telling loan officers right now, like, don't wait until it's time to do the refi to call the customer. Like, you should be leaning in to your database right now, and letting them know that you care and you're there, and then starting to kind of like set expectations for like getting them ready. Like, hey, when rates hit blank, this is what you should do. But what advice do you have as the tax coach for loan officers right now to be valuable to both realtors and consumers?
Yeah, you touched on one of it, is to like get ahead of it, right? Like, even as a consumer, I'm already getting refi letters, like 10 of them a day in my mailbox, from all the marketing that LOs are doing. And so really, like, reach out to your people, reach out to your clients, let them know, hey, maybe today is not the best time, but we're anticipating this in 30 days. I just want to put the bug in your ear, tell them the benefits of it. So really, like, nurturing those relationships are so huge. Like, even to shout out Sosi, right? Like, he's who we use for all of our loans. And there's a reason he's gotten 8 figures worth of loans from us, is because he is really like the best LO I've ever seen in terms of nurturing relationships and sending little gifts and like little like touch points. And those things go really far. Like, I would rather stay with him than to find the cheapest person out there. And that's the same in our industry too, right? Like, we are not the cheapest out there, but we will save you the most amount in taxes, and our communication and nurture is so good. So that's
real quick on that, as someone who works with Sosi and gets a total cost analysis, the mortgage coach experience, what are your thoughts on that? Both as a consumer, someone who's been through the mortgage coach experience, and for the people you refer to Sosi, any thoughts on how important that is?
Yeah. Oh my gosh. Like, the last home we bought was a shit show. I'll be honest. Like, it was the most expensive house we've ever purchased. And so just getting the documentation, and obviously I'm really good at saving money in taxes. So it doesn't look like I make very much on paper. So really just like going through every single scenario available out there, like what are the pros and the cons of each of it, and like cash out of pocket and different rates and all of that. Like, that's what I love about what Sosi does, is like the various scenarios. And that's why I send like most of my clients to him. I'm like, hey, he'll give you like 12 different scenarios based on what you want to put down, based on, I'll give you the tax savings amount, but like he'll give you the different scenarios. So that's what I love.
You love it. Cool. Well, I love that you love that. Keep going with your advice to folks going to any
Yeah,
tax issues that we should be on the lookout for, or
I
call
mean,
out.
I would say, like, no one should tell you no on a refi. If you can tell people, I mean, you're not a tax advisor, but you can at least say, like, when else in your life are you going to get tax-free money other than when you die and your family gets your life insurance, Like, if someone's like, hey, I can get you an extra $100,000 in your pocket from a cash out refi, and your rate's going to go down, and blah, 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 I would be like, well, where do I sign? So really knowing the tax side of it, it's tax-free money. You're lowering your rate, which could lower your payment unless you want the cash out. But I would do cash out refi, take that cash, go buy rental properties, cost seg that rental property, save more in taxes, and like keep doing it, So I can't wait to refi.
All right, time out. You just mentioned cost seg. And so I think that you lost most of the group here. They don't understand about cost segregation and who is eligible to take advantage of that. And so would you mind just talking about that and what the real estate professional status is, and how someone maybe could earn that if in order to take advantage of cost seg, and even also, even if it's necessary to be a real estate professional, take advantage of that?
Yeah. Oh my gosh. Okay. Also, you guys, as loan officers, need to know all these different scenarios for not just tax purposes, but like, this is how you will get investor clients, as if you can talk about these types of things with them. So get used to like investor lingo. Like, you can watch YouTubes out there, whatever it might be. We have a real estate course.
Maybe they should watch you,
Yeah, we have a real estate course, right off your real estate. Shameless plug. But what we love and why real estate is the #1 way to save money in taxes. I'll say it again, real estate's the #1 way to save money in taxes. And I could get into the whole like government policy of why that is, but the short story is what's one of government in any country, what's their job? To provide safe housing. And so in order to do that, our government has chosen not to have government housing per se, but to leave it to the people to provide the safe housing. So in order to incentivize us, the people, to have safe housing, they give you a lot of tax incentives. So what are they? Well, one of them is a cost segregation study. You've probably all heard of depreciation. What depreciation is, it's in the tax world, we call it a phantom expense. In your world, you're probably used to seeing it as an add back. It's something you can add back to someone's income because it didn't really cost them anything, right? So depreciation really just means tax savings because it's an expense lowering your taxable income. And so you pay less in taxes. Well, what a cost seg does is accelerate that depreciation. So let's say instead of $10,000 a year that you would be taking on an investment property for depreciation, we did a cost seg and we said, well, first year you get about 25% of the purchase price as an expense. So let's say you bought something for $200K. Year one, you get a $50,000 deduction on your tax return, meaning your taxable income is lowered by $50K. If you're in the highest tax bracket, you just save $25K in taxes, which then you could take that $25K, put it towards another down payment on another house and keep cost segging it. Now, the trick is, can you take that loss or can you not? So there's something in the tax world called real estate professional. It does not mean real estate agent. There's 11 industries that you can be in where you could qualify as a real estate professional. It's just based on number of hours that you work in some sort of real estate. But this could be a general contractor. They spend 750 hours at least a year remodeling homes. This could be a loan officer, sometimes, not always, just depending on how you're structured. But if you spend 750 hours, you could be a real estate professional. Obviously, it's really easy for realtors because they spend a lot of time in real estate. But let's say you qualify as a rep, real estate professional. You can take all the real estate losses you want. They're fantastic. I make sure my husband helps in our business, but I cap him at 9 hours a week in our business because he has to spend 15 hours a week in real estate so that he keeps our rep status. So only one of two spouses needs to be a rep in order for you to take all your rental real estate losses. But just like as an example, for last year, we had over $1 million in accelerated depreciation that offset our business income. So that's a huge tax savings, right? That could be like over $500,000 that the government isn't getting because I invested in real estate and provide safe housing for their citizens.
So that's
that was
huge,
really
everyone,
long.
right? So, but that's huge. You all, and again, it may or may not apply to you. I'm married to an attorney, so she does not think it applies to me. So I miss out on all these tax savings on our 24+ rental properties that we own, and it's on our to-do list. We're going to figure it out for this year as a married couple. And I love that I wrote down 9 hours at your other job for your husband and 15 hours as a real estate professional. But think about this for all your real estate agents that you all work with. A lot of those real estate agents own rental property and probably are unaware that this is a tax benefit that they can take advantage of. And so think about how valuable you can be, because I've sat in rooms, right? Deborah and I are part of a group called Be Wealthy. I'm also part of a big group at Keller Williams that talks about this. And even, in those rooms of people who are super smart in investing, there were people I've seen the look on their face when they realize the amount of money that they can save doing this, including the person who used it to accelerate the depreciation on their private plane.
Yep. Yeah. We're even looking at buying a big boat this year to help with the depreciation because depreciation has gone down. Oh, there's feedback.
Yeah, Deborah, something's going on. She's working on it. She knows that there's an issue that she'll solve because she's a solver.
So if you know, 2 years ago, accelerated depreciation was at 100%. Then last year was 80 and this year was 60. We were all hoping there was a bill proposed to put it back to 100%. And they kind of delayed it too much. And then they switched presidential candidates. So now it's not going to be passed depending on who is elected this election. So 2024's election is going to change taxes like probably the most I've seen in my career in 15 years. So we'll see what happens there. But Todd, I want to give you 2 things that could help your tax situation because it might help others listening
That sounds amazing.
that think that maybe they are not a rep. So there is a carve out for LOs if you're a part owner of a company. So that could work depending, I don't know your situation, but there is an exception for loan officers because a lot of you are probably W-2, but there is like a small carve out there. The other thing that we help clients through when they really cannot under any circumstance qualify as a rep because both of you are W-2 employees is the short-term rental loophole. So for those of you that have not heard of the short-term rental loophole, it doesn't just mean putting your house on Airbnb and calling it a short-term rental. You have to hit still the number of hours, just like, the IRS is very picky about that. But your average stay has to be less than 7 days. So you have to go through, if you do have a short-term rental and say, well, maybe I had 10 stays last year. And if I totaled the number of stays divided by 10, is that average less than 7? So you can also set up on Airbnb that they can't stay longer than like X amount of days. That could also help you, right? Because sometimes people will book for a month and then that will kind of screw your average 7 days. But if you have an average stay of 7 days and you can spend more than 100 hours on the property, then that passive real estate just became active for you. So now you can take those losses and apply it towards your active income, including your W-2 income. So what we tell our clients is maybe you buy one Airbnb property each year, maybe in Q4, you short-term rental it for 3 months. And then, in January, you didn't make as much money as you thought last year on the short-term rental. So you're going to turn it into a long-term. But last year's taxes still counts as a short-term rental. And now we can cost seg it, take the accelerated depreciation, offset it on your W-2, and then move it to a long-term or midterm rental the next year and just keep doing that each year.
And on that, you have to manage the Airbnb yourself, or can you actually let someone else manage it?
You can let someone else manage it, but you still have to spend more hours than anyone else. So typically when you get an Airbnb, like let's say you bought one today, in September, you're going to spend a lot of time finding furniture, setting up the listing. You're probably going to manage it through the first few times people stay there because you just want to like work out the kinks. And then maybe you let someone manage it for you for October, November, December. You're still probably spent more time than they did, responding to a text message for 2 seconds.
Look at that. That is real tax coaching, everyone. Live.
Yeah, love
Do
it.
either of you have any questions on this thread before I shift gears onto another thread?
Well, I want to hit something she said on that, but Deborah, you go first.
My question that's renting space in my head is for the loan officers wondering what's that first contact to earn a relationship with someone like yourself in their market center where they're also reviewing tax returns and they could see, what people are paying in interest, but really develop a partnership of referrals both ways. How do you get in that door for someone like yourself?
Oh gosh. I mean, just reach out to people that you like. It doesn't ever hurt to reach out to someone. So, I mean, it's just an email away. And I would say also like, don't get too caught up in, it has to be in your market because so many people work remotely nowadays. Like we're an all remote firm. I have employees in 16 states. All of our clients meet with us over Zoom. So don't like pigeonhole yourself to some small town accountant that might not give you all of the tax advice that you're needing, but reach out to a bunch, meet with a bunch, and you'll probably have multiple contacts and referrals for people. Like, we've mentioned Soci a lot. He's one of my really good friends, but he also has other contacts for his W-2 people. Like he knows I don't take W-2 only clients. So you are going to need multiple contacts and referrals. And what's the worst that can happen? You just have multiple referral partners and maybe one of them will need a house one day too. So it just never hurts.
And I want to answer that briefly. And then I want to go back and ask a question on something you said around refis. but guys, Google art of referral. Like I built my business back in the day before I founded Mortgage Coach on working with CPAs and financial planners. And my script was really easy. I'd call them up. Hey, my name's Dave Savage with Excalibur Mortgage. I specialize in helping CPAs and their clients with their real estate financing needs. Do you ever have clients that ask you about real estate financing? And some people said yes. And then I started a conversation with them. And so text, email, social, and I founded Mortgage Coach because when I did get a CPA or financial planner that wanted to work with me, I wanted to be able to say, you know what? My advice makes a difference. And I would say, and I'd have a fee worksheet. Most of your clients, when they're getting mortgages, this is what they're going to get. And it's missing a lot of information. It's not helping them build wealth with real estate, which is really one of my goals, is to help people achieve financial freedom and, you know, say things that real CPAs are just going, yeah, this dude's my guy. And then I'd show them a mortgage coach and I'd say, this is what I'm going to do. And my goal is to not only make sure your clients achieve financial freedom through the mortgage decisions, but my goal is to have a partnership with you so that literally you're giving them tax advice, I'm giving them this advice. And you know what? I never promised them I'd give them referrals, but I promised them that, you know what, the people you refer to me will give you more referrals and they'll be better clients. So give something like that a try and read
What was that
The Art
called,
of Referral.
Dave, that you said to Google?
The Art of Referral. Just
Okay.
by put my name in, Art of Referral, Dave Savage. It's, you know, been downloaded tens of thousands of times, and it's pretty dated, but it's still legit. But by the way, Barbara, would that whole kind of sequence and value prop be? I mean, obviously you're not going to leave SOCI because you've got a great relationship. But by the way, most CPAs do not have a SOCI. Most financial planners do not have a SOCI.
Yeah.
Any thoughts on that or any edits that you have?
No, I love all of that. I mean, just to give you an example of like the art of referring people and how we even met Soci was one of our very first clients years ago. She had just started her social media management business, so super small client, right? But you still service those small clients the same that you would service a whale client. And so eventually she was like, hey, my real estate agent that I just used to buy a house, she mentioned something about taxes. So here's an email introducing you to. So then a year later, she starts working with us and introduces me to Soci. And Soci's like, yeah, I really like my accountant. Like, I don't need any changes, but let me know what you're doing. I'll follow you on social media. And we just kind of like chatted back and forth for an entire year. It's like dating, right? You know, back and forth for like a year, but he did within that year, you know, when he had business owner clients, he was like, hey, can you just look at their tax return? Is there anything missing here or opportunities? And, you know, I would help them out. He would send clients to us that did become clients. And then eventually a year after that, then Soci was like, okay, I'm fed up with my accountant. And so it's like, there's always like these levels to referrals, and never underestimate someone because someone can always refer someone else.
Yeah, that's beautiful. And by the way, we put a couple different download links in Zoom. It's also available in our Facebook group. So the Trust Engine Productivity Mastermind Facebook group, if you go to the document section and do a search, but and I just can't recommend enough, with not just because of the NAR settlement, you know, realtors need you. And if you have strategic relationships with financial planners, CPAs, you are more valuable to real estate agents. You know, you're going to get to the consumer first. By the way, you're going to become more valuable to the consumers you serve. So every mortgage professional should have multiple CPA relationships, multiple financial planner relationships. And then remember, the best way of all is when you do a loan for someone that, you know, obviously has a CPA, first of all, always ask them, you know, how do you feel about your CPA relationship? You know, on a scale of 1 to 5, where are they? And if they say a 1 or 2, that's an opportunity to refer that person to one of your CPA relationships. And if they say a 4 or 5, you go, hey, would you mind introducing me to them? I think I could. I really want to collaborate with them as I help you make the best mortgage decision. And now you're getting a trusted referral. It's around supporting a client's needs. You're coming in with ethos, you're coming in with relevance, and then have that, hey, I'm not your typical LO. I'm a mortgage advisor conversation. So all right. So hey, Barbara, you mentioned something around refis. First of all, when you're saving people money on a rate and term refi, like that's free money.
Yeah.
Like that's a savings. If they reinvest that payment and pay off their house faster and reduce their interest costs, that's free money. And then you also talked about debt consol and pulling cash out, because there's never been more equity than there is in America. Could you just speak to that? Because also I think there's a good idea where, like, let's go to a parent who's got a kid that's in home buying age. And I think, going from memory, you and I both kind of aligned on every kid should start with a duplex, triplex, or fourplex, or house hack. Why don't you, one, kind of share some tax strategy, but also at the same time do a little riff on advice to families that have home buying age kids on how do they help their kids and help themselves and help create generational wealth with their family? What's the tax coach playbook?
Yeah, I mean, first, I would say if someone's just lowering their payment every month, like you're saying, that is free money, but also, like, share that value with your client. Sure, they might see a $200 savings every month and they're like, okay, that's cool. But maybe you send them an email that's like, hey, this $200 savings equates to $2,400 a month. And if you invested that $2,400 a month just into a high yield savings account or into the stock market, let's say, or whatever that might be, this is what it's worth over the term of your loan, right? Doesn't that sound so much cooler? I actually just did that for a client this morning. She was trying to figure out if she should max out her retirement contributions this year at $122,000 or what it would look like at 75 or just not contributing at all. And so I did this like whole calculation and then I put it into ChatGPT. Guys, if you're not using ChatGPT, please start using AI. But I said, hey, using this information, extrapolate it to if she took those tax savings, she was going to save about $62,000 in taxes by maxing out her retirement. And I said, hey, what's this? If she invested the $62K until she retired, what would it be worth? And then if she took that $62K, put it as a down payment on a house, probably like a $300,000 house, what would that house be worth at her retirement age? And so it's like this huge, sounds complicated. It's not, because ChatGPT will do it for you. But when they're reading that, they're like, oh my gosh, this person just got me like $1 million, not just 60,000 in tax savings. So use even just the smallest amount of savings to show them what the value really is, because they'll be stickier to you. But in terms of cash out refis.
Whoa. Guys, did everybody hear all that? Like, first of all, put this on pause, go back and listen to that, and do that. Like, actually come up with a scenario and actually do what she said. And then remember, you all have a beautiful presentation, like everything that she just said, you could actually show to the consumer with a mortgage coach report, so that, like, it's visual. There's charts and graphs. You're showing them what things look like 3 years. So, like, co-create magic for people, use ChatGPT, use Mortgage Coach. Anyways, that was radical. I wanted to make sure that we didn't pass by that. By the way, audience, you've been pretty quiet with the reactions. Give us a little reaction on how you think this call is going so far and what you think of Barbara, the tax coach.
Well, thank you. And I'm happy to share like my ChatGPT, like what I could just copy and paste the conversation. So you can even see like what I'm asking it. But the cash out refi, let's use the scenario Dave brought up of there's a couple that has homeownership age kids, and it's really hard to buy houses right now. Let's say the kids want to buy a quadplex, or we can talk them into buying a quadplex, because right now you can get a quadplex for 5% down, right? So let's say a quadplex is $800,000. So $200,000 a door. the 5% down is going to be $40,000. So where do we get the 40,000 if the kids, don't have anything in savings, they have a huge student loan debt, it's not possible for them to even come up with the 5%. Well, maybe you have equity in your home. And so one, you could refi to lower the rate if you had a higher rate, but probably they've been in that house forever. So they're not refining for the rate, but maybe they'll refi for the cash out. So they could easily get likely $100,000 out of their house, and they use 40 of it to use for the down payment for their kids. And maybe they need the 60,000 to rehab the 4 units so that they can get higher rents or whatever it might be. Maybe they use the 60,000 to pay off their kids' student loans so that they don't have to worry about that when now they have 4 houses, 4 doors to worry about. But I love the quadplex for kids, because when else can we buy an investment property for 5% down? I can tell you I can't. I am paying 25 or 30% down on everything I'm buying. So if I could buy something with 5% down, I would do it all day long. And then not only is your kid living in one of the doors, they're now a landlord and they have to step up, right? They need to learn the responsibilities of being a landlord. They're going to get in there and be like fixing toilets and repairing window screens and all the things that come with being a landlord. And also, hopefully, the tenants are a little bit better behaved because they know that the owner is occupying one of the units. So there's so many great things about it. You could also form maybe a partnership in that quadplex so that then the parents, you can allocate all the depreciation to the parents who need maybe the depreciation more than the kids. So there's just so many things that you could do with the quadplex refi scenario.
I love that. And full disclosure, that's how I bought my first house. I was 19. Houses were a little less expensive then, but interest rates were over 10%. My parents gifted me the 3.5% down payment on an FHA loan. I was the primary borrower. They were the non-occupant co-borrowers. We got the seller to pay all the closing costs. And I had to do that. My mortgage, don't laugh, because it was like in the 80s, late 80s, but it was $660, and my roommates each paid $300 in rent. And then I learned really quick that guy roommates weren't the best roommates. So I kicked them out and I invested my hard-earned money into new carpet and paint, made the house a little bit nicer. And then I got graduate student female roommates who could pay me more money. And in long story short, that was the start of my real estate career. I rented it out after I bought my next house, and then I did a 1031 exchange years later, and that's actually where I bought my first multifamily property. And so the strategy works. You just have to figure out how can you do it in a cost-effective way. I totally agree with Barbara. If you can do it with the fourplex, that's amazing. In Arizona now, that's really there's not a lot of them. So the single family option is probably a more likely scenario. But think about this advice. If you can give this as a suggestion to your real estate agents to be suggesting to their clients if they're doing reviews with their clients, and then this should just be part of your conversation on all your annual reviews with all of your clients who hopefully you know well enough to know that they've got kids who are in college, who are young adults, who are older adults who are still renting homes. And so these are just really valuable conversations you should all be thinking about, not just for yourself, not just for the real estate agents, but for all of your clients together.
Yeah.
Since we are on the topic of like parents and kids, I'll say from a tax perspective, please don't gift your kids your house, like your own personal residence, until you die, because there's such a big tax savings if you wait to give it to them till you pass away. Let's say you bought a house for $400K and today it's worth $800K, but when you die, it's worth $1 million. If you gave it to them today, it's a taxable event and they could have to pay taxes on $400,000 of gain. But if you waited till you passed away and it's now worth $1 million, your kids get it for the basis of $1 million, and they could sell it the next day for 0 in gains, or they just hold it if they wanted to hold it. But please don't do that.
Thank you. Thank you. Thank you. Thank you. And Todd, you need to create a little bit of a house hack playbook for the modern mortgage IQ community. You are a living, breathing example of that. I've heard that story before, but it just landed differently. And then Barbara, you just added a really great chapter and some really great content for both the Mortgage Coach YouTube channel, but also for First Home IQ. We had Nicole Ruth last week, right? Was it last week that we had Nicole?
Yes.
And she went on a rant. She's the number one mortgage advisor, mortgage coach in the state of Colorado. She's a prolific real estate investor herself, but she went on a whole, I call it a rant at like, hey, affordability is not like it was when we were in our 20s. Like there is a bigger hurdle for kids in their 20s to come over to get into homeownership, and just the way she talks to families is, you should make this a priority. Like a lot of families will plan for college education, but families should be planning for helping their kids achieve homeownership. Do you agree with that? Like, do you believe that like we should be helping the next generation get into homeownership to the best of our abilities,
Yeah, 1,000%. Like something that we do with our clients, and maybe this will work for some of you, but maybe not all of you, is especially for our business owner clients. Let's say any of you have a business or are paid through 1099. You could do this, but you pay your kids through the business. This year, they can be paid $14,600 tax-free, federally tax-free. Your state might tax it. Every state is different, but let's just call it tax-free. Then once that $14,600 is in your kid's bank account, take $7,000 of that and max out their Roth this year. Okay, a Roth is a post-tax account. So you just put tax-free money into a post-tax account that was already supposed to be taxed, so you already saved money there. Then that's going to grow tax-free. When they take it out, it's tax-free. And guess what? There's no penalties for taking it out for buying a house, for school later on. So let's say you started this when your kids are 5 years old, you're maxing out their Roth every year, 7,000, 7,000. It goes up a little every year, but let's say 7,000, 7,000 until they're 18. It's been growing now for 13 years. So the growth might not be there like for 40, 50 years, but you probably have enough by then to help with a down payment on their house. And it's been growing tax-free for you. Whereas like, a 529 plan has so many stipulations to be able to take it out. And what if your kids don't go to college? And the limits are really weird. Yes, now they changed it so 35,000 of it can go into a Roth, but that's not all of it. So I don't love 529 plans, but you can do it through a Roth. You can also have a self-directed Roth so that you can invest it into real estate right away. So that's how we help our clients with their kids to be able to buy a house later on. Is sure, if you want to save in a 529 plan, go do that, max that out, but also max out their Roth so that they can buy a house at college age. And now you don't have to pay the crazy dorm amounts or, college housing.
I think these are great. It's one of the things I did later with my kids. And so they've got Ross, and we're in the process of self-directing them so that they can invest alongside of my wife and I, who have self-directed all of our IRAs and in real estate and other types of investments. Someone's asking, what type of things can you pay a 5-year-old for? For me, the one that always comes up is advertising. You can certainly snap some photos of your kid and use that in your marketing so they can be a model. Your kids can do other office related activities. If you're doing mailing, they can lick stamps. Well, I don't think you lick stamps anymore. They can stick stamps. What else would you recommend, Barbara, that they do to hire their kids legally?
Yeah, I love all of those things. So you can use them as a model in your business. Like you're saying, if you're big on social media, they can be in your social media videos. My 6-year-old is the best photographer I have ever seen, probably because he's been doing it since he was little. But like any photos that you see on my social is my 6-year-old. And so we pay him as a photographer and videographer. And my husband, you guys are not the best Instagram husbands. And when we ask you to take photos or videos, you're like, that's my husband. So
Horrendous.
my 6-year-old doesn't.
Put it way down low and you're like,
Yeah.
not my double chin, like angles, guys.
Right. Yeah. So we pay our 6-year-old for photography, videography. He also scans all of our receipts, which is really important, you guys. So make sure you're scanning all your receipts. He does all of our shredding. He helps clean up the offices. There's so many things you can do. We have a list of like 100 different jobs. If you just reach out to me on social, I can send it to you.
So did you guys hear that? We'll put a link down below. Follow her on social. And I mean it, guys, like her social media, it's edutaining. It will save you money. It'll just make you smarter about money. and money matters. You know, if you want to go and have an incredible career in the mortgage industry, now more than ever, you need to modernize. And I want to just shine a light again on this assessment that's out now. It's called the Modern Mortgage IQ Assessment. It's free. And, you know, mindset, where are you at from 1 to 5 and having a level 5 mindset? Leadership, technology, advice, sales, personal branding, modern marketing, and of course, money. So take the assessment. Would love to see your scores. Sean Herrero actually took it yesterday, and he told me I already took it. I don't know if it was yesterday or today. The assessment looks really cool. Now, I looked at this. Sean Herrero gave himself a 60, 69. Like, come on. I know he had to score harder in modern marketing, but be honest, take the score. It'll take you about 5 minutes. I put a link down below to do that, whether you're watching this on YouTube or you're watching it. Where are you at as a modern mortgage advisor? Take the score today. So we're in the last 8 minutes of this. Barbara, I do want to make sure you promote your services. I think you've already done that. You've delivered so much value. But for any mortgage or real estate professional on here, like maybe it's just how you open the call with your value prop, but why should they follow you? And what are the best ways for them to get value from you outside of this call itself?
I think knowledge is power, right? So even if you're just following on social media and you can get just a new tax tip or a little snippet that can help you in your business or your family or your clients' businesses, like that's huge in and of itself. If you have clients or you just want us to look at your tax returns, we look at your tax returns for free. I'll let you know what opportunities I see in there for you to save money in taxes. I will say at 14 years, I have never seen a tax return that I couldn't identify one thing where you could save money in taxes. So I challenge you to give me a return that I can't find any tax savings on. But also, if you're just interested in more overall real estate mortgage knowledge, I'll do a shameless plug of our big event is November 4th in Scottsdale, Arizona, called Minted Wealth, and it's to get your wealth in mint condition. We have Vina Jetty speaking, who's the biggest female real estate investor in the US. She's done over $1 billion in multifamily buying and selling. We, of course, have a mortgage loan officer speaking on all things like tax strategies with mortgage. I'll be speaking on tax savings. We have financial planner, estate planner, because you can never be too protected. Our tax manager's wife unfortunately passed away this year, April 13th, at age 41. And, you know, as much as he thought they were covered, there's always more that you can do to help protect your family. And they have 3 really small kids. So it's really important for us that our team and our clients and just all of you really protect yourself and your assets. So that's what this event will be all about.
Minted Wealth. Go check it out.
My backyard. I can't wait. I'm signing up.
Yeah. So I guarantee Todd will be there. We'll put a link down below. If you're watching this on YouTube, which is our biggest audience, there'll be a link in show notes. There'll be a link to that First Home IQ assessment. It's free. Shouldn't take you more than 5 minutes. Can't wait to see how people score out there. So Deborah, before we have Todd close it out, we just put a link, guys, mintedwealthlive.com. Any questions you have about how she's become such a big deal on Instagram or any social media, or just any question you want to ask at all, Deborah, before we run out of time?
So I know you talked about finding your why, and that could be like a whole probably hour conversation for those who struggle with identifying their why and tying it into what they do. But I would say, could you speak a little bit on, because you wear multiple hats? And before we officially started this call, it was funny because Barbara was on and Dave didn't know it. And Dave was like, yeah, Barbara's more than just a tax coach. Like, she's a business owner, she's a podcaster, she's a mom, and I was like, she's a badass. But you wear so many hats, and there's a lot of content creators that are also in mortgage that feel that same struggle of like, how do I need to create, all different accounts? Do I need to have multiple versions of myself? Because I feel like I'm kind of a jack of all trades. Can you speak on that a little bit of how you navigated that journey through your own content creation and what's your strategy when you wear so many hats?
Yeah, I think the iterations of our social media has been a lot over the years. But when I first started, it was just me. And it was me showing up on stories every single day. Probably out of 5 years, there's been maybe 10 days where the red circle wasn't there on Instagram for me to not have stories. So just staying consistent, sharing your life. People are inherently nosy, right? So they want to know what the heck you're doing. I still get like the weirdest. I'll like run into people and they'll be like, "Oh my gosh, I saw you were in blah 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 restaurant." And I'll be like, "Oh, that's so weird. People know all the things um from social." But just share yourself, be authentic to who you are. Um that's what I did in the beginning. I mean, obviously I'm still who I am and authentic today, but I also had to create boundaries. And so you'll learn that as you go and creating your social media boundaries. Now I don't ever post anything that is like I was just talking to Dave. We were just in Switzerland. I didn't post anything about Switzerland until I left Switzerland. Like that's just kind of the boundaries that I have now to protect ourselves and our family. So you'll create the boundaries as you go and grow. But also outsourcing, like I can't do it all. We have multiple businesses, we have real estate investments, we're remodeling a fiveplex, we're remodeling our Scottsdale office, like so many things happening. I have a podcast, social media. That you have to hire the help. And as your team grows, like your money will grow and scale too, because you'll have more time to be creative and to have more abundance and just like free time. So I would say like don't be afraid to also hire it out.
Insert.
Now these days, like I have to go to my own profile to see what my stories and posts are. I'll be like, "Oh, that's cute." And I don't even know that it's on there. So maybe it's outsourcing that.
I think that's so critical, and it's so funny because I was just at the gym, so it wasn't like I was anywhere, but I loved it that even the gym coach called me out for my great social media prowess, which of course is all Deborah and her team over at Plug and Play SM. And so I think that outsourcing is so important, right? We talk about being captain of the wealth team, and there's a few things I would say. Number one is that the minted wealthlive.com event that Barbara's doing. Guess what? Her loan officer speaking is Amber Kavara, great member of our Mortgage Coach Trust Engine community. So that's awesome. You've got a great LO on stage, a good friend of ours. So make sure you're checking that out. Number two is that Barbara offered you all a challenge, right? You can send her your tax returns, unless you're only W-2 employee, because she doesn't want you then you could just have a boring accountant. But if it's a great opportunity for you to make recommendations to your self-employed clients, to your realtor clients, to make a referral and build a relationship with Barbara and her team. And so I think you got to think through: are you maximizing that for yourself first, and look at these other things? And I think that like what she's doing with her conference is so important, right? I mean, if you're not really thinking through for yourself the legacy that you're building, if you're not thinking through, what is your trust protection, what are all these other things that you have going on, you're really not going to be optimized for the future. And we're in a long-term game here, right? We're not trading Bitcoin every day and having it go up and down 5%. What we're really looking at is how do we build long-term wealth? And we started off the conversation with it, right? It's ultimately real estate is the way that more people in the United States, probably the rest of the world, have built wealth. Barbara walked through the little bit of the story of why the tax code incentivizes people investing in real estate. So there's a great opportunity there. And so I feel like anytime that you have the gift of a genius in the tax world, we should take advantage of it. And we learned not just how we can personally grow, how we can help our realtors grow, how can we build these relationships, how we can build a team, how we can leverage people like Deborah, how we can use tools like Mortgage Coach, and how Soci won her over. Now, my only suggestion would be is if somebody like Barbara says to you, hey, let me take a look at your taxes, take her up on it. Don't be like Soci and take a whole year of dating, because obviously she's a badass and he missed out on a whole year of hanging out with her more, it sounds like. So I'm just super excited. It was great meeting you finally. I missed the last call and I was super sad. Dave, anything else you want to add before we send everyone off?
Well, first of all, thank you, Barbara. I love your vibe, the wisdom you always bring. It's way beyond what a CPA would provide. Audience, give her a reaction. Let us know what you thought of Barbara. And then, my closing thought, guys, it's game time. Like, it is a new cycle in the market that we're entering that is going to be incredibly rewarding for some people. And you know what? And some people are going to do better. Like, it's getting going to be better, but they're not going to gain market share like others. So make sure that you're training, guys. It's training time. So if you don't know how to do rate and term and cash out refis with Mortgage Coach, there's a playlist how to do that. If you want to modernize yourself, like check out modernmortgageiq.com. It's really designed for producing leaders. For anybody that is a producing branch manager, a producing regional, like it's time to recruit, train, and retain your LOs. And it's time to recruit, train, and retain your real estate agents. And so just take action on this content. Barbara, super grateful for you. Thank you so much. Everybody, if you got value, give this a like, share it with other mortgage friends. I think you could share this with realtors and it would be valuable for everyone. This is oh, by the way, Deborah Bird, social media, plug and play, sm.com. And again, just a little extra plug on Deborah. I mean, not only is she managing social media for some of the most successful mortgage professionals in America, including Todd and Win by Noon and Modern Mortgage Summit, and the list goes on, but she's a mortgage strategist. Like just following her on social media, the content she brings for TCA Tuesday, like she knows how to sell, she knows how to market. And so make sure you're following her on all channels. And we put a link to her website. If you want to take your social media to the next level, she's your woman. Take care, everybody.
Thank you.
This is a wrap.